In the metals quadrant, taking a look at the July copper futures, which pulled back on a quiet day with continued consolidation. That consolidation has gone on for a fifth straight session, with the range basically being between 4.9370 and 4.8465. There have been spikes above and below those levels, but the copper market has still come down to settle within that range as it holds support. The high today was 4.9260, which was only up 0.02% from yesterday's close. And the low today was 4.8510, which was down 1.5% from yesterday's close. And with only a little bit of time left in the future session, copper is still down about 2/3%. It's becoming more apparent that China trade talks will take longer than the market hopes overall. There have been no concrete statements on any progress, and the only public statements that both Chinese representatives and U.S. representatives have made publicly have been basically cautious optimism. That's the attitude that the representatives have presented. Officials are seeking breakthroughs on rare earth minerals and tech export controls, and markets are hopeful but wary of no tariff relief possibly being one of the results, and supply chain disruptions if negotiations fail. Going back to President Trump's first term, it took 18 months to reach a deal for China to increase its product purchases from the U.S. So this is likely to take longer than the market would like to see either way, because it's a more complicated structure of dealings. Bond yields started actually lower today in the U.S., but then came back toward unchanged, pressuring metals, not only keeping copper from breaking out, but also pushing gold lower after it started the session on the positive side. Yields started down 5 basis points on the 2-year, between 3 and 4 basis points between the 5-year and the 30-year. This is all lower, but then reversed to unchanged on the 2-year and only down 1 to 2 basis points through the rest of the curve. And this again helped to pressure metals from breaking out.